Welcome back, our family caregivers and our financial advisors who listen to the Care Right Family Caregiver podcast. My name is Annalee Kruger. I'm the host of the podcast. We work with family caregivers all across the country in developing customized aging plans. Most families come to us as overwhelmed or burned out family caregivers, and they have finally realized that maybe dad's dementia is progressing to the point where they just can't safely take care of him at home anymore with the systems and the structures that families themselves have put into place, and that they need more of a professional approach to putting an actual plan together. I also work with financial planners in the financial industry across the country, and I train financial planners and the financial services industry on how to add more value, make their relationship with their clients more sticky by actually addressing and being proactive with, are you a family caregiver conversation, or is dementia in your family journey right now, so that these advisors that are coachable and who care about their clients can better be equipped and educated to know how to respond to those questions that their clients are asking, and have some training so that they know how to better address those needs of their aging business to be market leaders in the industry instead of followers. So that's what I do, Annalee Kruger with Care Right. As you know, if you've listened to the podcast channel before, I always get really super cool people to take some time out of their very busy day to shed some light on whatever subject matter they are the expert in. And today is no different. So today I am interviewing and we're talking to Nathan Sanow, and we are going to learn more about annuities. I know they're complicated. They've had kind of a bad rap. Some financial advisors, for those that are listening, they're like, no annuities. Consumers sometimes feel the same way. So can you just kind of take our time today, Nathan, to just kind of clear the air and, and give us some insights on modern day annuities and the good, the bad, the ugly, the considerations, and what does that entail?
Absolutely. And thank you for having me on your podcast, Annalee. And you're one of the few people that say I'm very interesting when I talk to my family about my kids, especially about long term care, annuities, and insurance. It's like, oh my gosh. But it's an important topic and people need to
Yeah, it is.
understand it. So I'll start with just a little bit of my background, the company, what we do. So I own Master Care, which also owns ltcconsumer.com, which is where a lot of people may find us. We're one of the nation's largest long-term care planning firms, and we've been doing this since 1988. So almost 40 years going on now. And just to give you scope, we'll help maybe 10,000 people or so a year plan for long-term care. And one of our mantras is everyone needs to have a plan for long-term care, but not everyone needs insurance or an annuity. But having a plan, kind of what you do for your audience, is vitally
Yeah.
important just to be prepared should that happen. So, annuities, just at a very high level, are a structured way of taking money, typically a single premium payment. Sometimes it's structured over time, but I want to take a defined amount of money and give it to a insurance company generally to structure payments over time. So the most simplest thing is the lottery, the lotto ticket or Powerball was 1.8 billion
Yep.
or whatever crazy amount it was over Christmas. I did not win, unfortunately,
Me
but
neither, or we
generally
wouldn't
the
be sitting
way
here.
payments are structured is an annuity. You won $1 million, and that $1 million is going to get set into an annuity and paid to you structured 20 over 20 years or whatever the time may be. So at a very, very high level, that's how annuities work is I'm taking a pot of money, I'm going to structure that payment over either a defined period of time or over a lifetime of, so you can't outlive your payments, and that's why people use annuities in general.
Well, I would think that with an annuity, it's guaranteed income when you're retired, and I would think that would give most consumers and their financial advisor a lot of peace of mind knowing that, okay, at least we know we're going to have this chunk of money coming in every month. Because as you know, in your line of work, you've helped thousands and thousands of thousands of families through the last few decades. You know where we started. You and I about have the same kind of length of track record
Uh-huh.
in our industry, right? Like I've worked with families and financial planners for over 30 years. You've got that same kind of track record. And I can tell you the shift from home care used to be affordable and now it's not.
Mhm.
When you need 24/7 care at home and dad's got dementia, mom has diabetes and kidney disease, and both parents need care 24/7, it's expensive. And we're not talking a few thousand, we're talking 30 to 40 to 50,000 per month.
Yep.
If you need one, let alone two companions or caregivers to tend to you or your aging parents, and that's not including the cost of a geriatric care manager to coordinate doctor's appointments, make sure you get to your appointments, talk to the physical therapist, all that stuff that adult kids or spouses who are the primary caregiver are doing for free that has to be done pretty much during normal business hours, which makes it hard to balance work or a career plus manage the care and coordination of care of elderly people. So you're talking thousands of dollars in just additional supports at home so that you as a family caregiver can just be that, the son, the daughter, or the spouse, and not have to be the care patrol, care coordinator, care manager, care advocate, all of that. So annuities are a really great way to help pay for or anticipate the senior care costs that are coming down the pike. We don't get healthier as we age. We don't get more cognizant as we age. So I think it's important for advisors and our listeners who are families to understand that you have to start now planning for senior care costs no matter how old you are. Tell us a little bit more, go into a deeper dive. I'll be quiet now. I just wanted to kind of set the stage for those that are maybe joining us about how much senior care actually costs. And moving into a care facility has its own, obviously, expense and costs as well. Annuities can be a really helpful way to help offset the cost of senior care. So go ahead, floor is
Yeah,
yours.
absolutely. Just a ironic data point. My VP of operations, her mom had a fall over Thanksgiving and has early onset dementia. Got released back to the hospital, and she needs 24/7 care at home, and it was
Yeah,
$37,000 a month. That was three
right.
weeks ago. Just to give
Yeah.
perspective of that cost, if you want that level of care at home. So when you look at planning for long-term care, there's lots of solutions that are available. There's traditional long-term care insurance, which is, think of it like term life insurance. It's the cheapest, most flexible way to fund a long-term care plan. It also has higher health underwriting requirements to be able to get that.
Uh-huh.
There's life insurance with long-term care benefits that is very popular as well, but you're also now health underwriting for life insurance and long-term care as well. Then you have annuities. And annuities, one of the great value is there are some annuities that you can literally get if you are on claim right now. If you're at home
Uh-huh.
receiving care or in a facility, you can buy a long-term care annuity right now. And so the health underwriting for annuities is significantly lower than any of the other products that are available to help plan for that. And so what the value of a long-term care annuity is, we're seeing a lot of people that had annuities 3, 4, 5 years ago because they had a chunk of money. And you
Yeah.
know what? The interest rate, if you remember 3 years ago, I think my savings account was yielding like 0.3% kind of a thing. And so
Right.
financial planners put people into annuities because, okay, it's yielding 2% or 3%. And a lot of those annuities are coming up out of 3 or 5 year or whatever the case may be. So, long-term care, one of the great things about long-term care insurance is the federal government passed a law that said if it's a tax qualified long-term care insurance policy or annuity, benefits and growth are always tax-free. So, one of the great structures that we see with annuities is you can take an existing annuity, maybe it's a wealthier family that has a life insurance policy with cash value that's overfunded, that they don't need quite that same amount of money, or they bought that annuity that their financial planner told them to get 5 years ago because it's a better way of getting money than the CD that they had options to. Well, you can
Uh-huh.
take that same money, it's called a 1035 exchange, and kind of exchange it for an old policy. And if you move it into a new long term care policy, whatever growth you've gotten on that policy, let's say you bought a policy or an annuity for 100 grand and now it's worth $150,000. If you were to annuitize or cash out that annuity today, you would have $50,000 of taxable gain that you have to pay taxes on and 100
Sure.
grand you put in. If you move that into a long-term care annuity, you have $150,000 or depending what you get, sometimes even more, 2 or 3 times that amount in long-term care benefits and that taxable gain goes away. So it's a great way for people that maybe you've got a policy that isn't fitting the right needs anymore, or hey, I want to solve for long-term care and I've got this life insurance policy. I can do that
Mhm.
in a very tax advantaged way than I would otherwise of paying cash out of pocket.
A lot of my clients that are the family caregivers, right, who are taking care of mom or dad with dementia or diabetes or whatever it is, just frail elderly. A lot of my clients have done like a layered financial approach to pay for care. So they have annuities, they have long-term care insurance, they have those universal life, and I'm not saying that right, but I always call it a hybrid life
Yep,
insurance because it's got a capacity to, functionality that it can pay. I'm not a financial advisor. I'm just telling you what a lot of my affluent clients do.
sure.
So I do the same thing, but on like on a level I can afford. But they have long-term care insurance, they have the hybrid life insurance policies, and then they also have annuities. And so they can do a layered stacked approach, and most of their care is actually covered.
Yeah.
So they don't have a lot of out of pocket. So, but for those that might not be in that kind of financial position where they planned or they had that type of income that they could do that kind of big approach to pay for senior care, what might kind of the average Joe Blow be able to do with an annuity?
So I always say the best insurance policy or annuity is one that you have at the time of claim, whether that's long-term care
True.
or auto insurance. Auto insurance is
True.
never good unless you have it in force at the time of claim. And then
Yep.
2, no one ever says when a long-term care annuity or policy, "You know what? This benefit's too low. Send me the I'm not gonna take the $5,000 or $3,000 a month," or whatever the benefit amount is. So, we always tell people that something is better than nothing, especially if you're kind of in
Mhm.
that middle affluent or you're not ultra wealthy or that kind of thing, because that is
Yeah.
whether it's $5,000 a month or 3,000 or 10,000 a month, that's money a month you don't have to think about. It's just going to come in.
Yeah.
But what's typical for us is someone that says, okay, I'm not in great health. I'm 65, 70. I've got some chronic, like insulin dependent diabetic. If you're on insulin, you're
Yep.
uninsurable. It's just not going to be possible, unfortunately. So I can't qualify otherwise. I've got access to $150,000 of money, whether that's in a life insurance, 1035, annuity, whatever, and I'll buy a long-term care policy annuity with that. For most people
Mhm.
with the health underwriting, that 150 grand instantly becomes 3 times that amount of long-term care benefit. That's $450,000 that typically gets paid out over 5 years, of monthly benefit that they don't have to think about. That
Sure.
annuity is also now gonna grow, depending what you
Right.
buy and what index you put it in or how there's lots of different ways to structure it. So for that person that's 70, 71, that, "Gosh, I can't medically qualify for life insurance anymore, because of whatever condition," I can use
Sure.
this vehicle to help give me long-term care benefits that are gonna be tax-free benefits at the time of claim.
So I have a question because sometimes this happens or sometimes this comes up. So say Ethel and Marvin, the parents that are frail and elderly, maybe they didn't plan ahead very well financially because they assumed Medicare was going to pay for everything and it of course does not. And so they're living maybe social security check to social security check and maybe some savings and that kind of thing. So their kids are actually the ones that are paid. That's what happens a lot with some of my clients too. Mom and dad, it's their kids, their adult kids that are actually financing their care, paying for my services, literally financing their parents. Most of them, they can or they wouldn't do it. But could an adult child who may have been successful in their career, could they purchase an annuity for parents or someone in the family that maybe kind of fits that category that maybe didn't plan or they did plan, but they ran out of money?
Absolutely. So the
Yeah.
only echo or the only wrinkle in that is the annuitant or the insured, if you will, is going to be Ethel and, the parent.
Yeah.
So
Marvin.
they're going to have to
Yep.
complete the application to get the
Sure.
policy. But absolutely, it's a great way for a family to
Yeah.
structure to say, okay, it's guaranteed income. That this actually is a case that my wife and I are living with her cousin. So her aunt is broke and single mom, a
Yep.
single woman, and so her
Yep.
cousins are what every kids should do and would do is mom needs help, so we're going to care for mom. And so they're paying
Yeah.
for her care because she doesn't have anything. And so that
Yeah.
absolutely can use structured money to say, okay, I'm going to take 100 grand or 150 grand or whatever, and I'm going to chunk that away to help pay for your mom's care. The other nice thing about an annuity is there's a death benefit. So
Right.
if you put in $150,000 and then God forbid your parent in that case passes away 6 months later, it's not like, oh, sorry, the rest of your contract is there and a death benefit that's paid out to whoever your beneficiaries are listed. The
Hmm.
other part that happens with many of the annuities is sometimes people think, I don't want to lock up my money, or I want to at least have access to liquidity just in case.
Right.
I'm going to give you 100
Yeah.
grand, but what happens if the market falls apart in 2 years? I need the money. Most of the
Yeah.
annuities can be set up to where you can withdraw up to 10% of what you put in each year. Now, that would be taxable if there's gain, if it's
Sure.
over and above what you've paid in, but it still gives you access to your cash. So that's why it's a very, very flexible product.
I was just going to say it's flexible. And that's why I wanted to ask the question to make sure that the listeners who may not be as, most, like I said, 90% of my clients have annuities. And so that's why I wanted to make sure that the listeners who may not be as familiar with how annuities work understand that, hey, if you do have aging parents and you've been successful and you've got a chunk of money that you might want to put towards their care, because one way or another, someone's gonna have to pay for their care, and the last thing that you want your parent to go through is or be on is Medicaid,
Mhm.
Title 19 or Medicaid, because then your parent loses all choice of where they can go to live, what type of home care they can get, what type of care they can get, and which providers will actually want to work with them. Nobody wants to work with Medicaid folks because they don't make as much money on them or they don't
Mhm.
make any money on them. And these places are businesses, senior care facilities are businesses. That's why all these senior care facilities that do contract with Medicaid in their nursing home, they put a cap on how many Medicaid residents that they'll allow. Otherwise, their payer mix is upside down, right?
Yep.
And so the last thing, like, because I know some families are like, well, we don't have to put a plan together, Annalee, for care because we're just going to deplete all of mom's money and put her on Medicaid. And I always just cringe when I hear that because I'm like, that is not a plan. That
Yeah.
is a plan for disaster, but it's not a plan.
Yeah, absolutely. And the other part with Medicaid is, this is exactly what my wife's cousins are living with. She's qualified for Medicaid. She's in Maryland. There's a 2.5 year wait list. So great,
Right.
you're qualified. There's no one to take
But it
you,
doesn't do you any
but it
good.
doesn't do you any good. So they're still paying for her care because
Right.
no person will take them. And
Right.
so, yeah, the other part is we were talking about having a plan in place, and a lot of these long-term care annuities are pretty new. Nationwide Insurance, for example, everyone's heard of
Yeah.
Nationwide. Their long-term care annuity just came to the market in October of last year, so 3 months ago. There's another one called Bridge by Equitable that came out a year
Hmm.
ago. So if you work with a financial planner and maybe you bought an annuity or that you looked at this 3, 4, or 5 years ago, the products just weren't there anymore at the
Right.
time. A few were, but most weren't. So That's why if you're in this space planning, it's worth looking at it again because a lot of these are just newer products on the mix.
Sure. And I think it's helpful too because I also teach families how to interview financial planners just because there's so many that are just transactional and are just trying they have the mindset of okay, well, how much more money can I make off of you as a client? And so to me they're not really in it for the right reason. And so one of the questions that I always coach families on when they're at that point of wanting to interview a different financial advisor just to see if someone else would add more value because they a lot of them don't address these aging issues. And so I'm like, well, work with an advisor who does then. And so one thing I would say too for advisors that might be listening to this is I know some of them maybe had shied away from annuities if they didn't have any compensation structure around the if they weren't licensed to sell them. So one thing I would say to consumers listening to this is make sure that when you're approaching a financial services professional about, okay, is an annuity the right fit for me? Just like if they're looking at a reverse mortgage or anything else, make sure that you're working with someone that you're comfortable with. And that's again why I curate high end people like Nathan for my podcast so that I can say, I know Nathan, we've had several conversations and you are someone that I would trust if a family is interested in learning more about, okay, is the annuity the right fit for me and my situation? You've worked with thousands of families for decades. And so you've done it a time or two.
Yeah, we're not, yeah, not our first policy. And the one thing I would say that most people don't know, and I cannot emphasize this enough when it comes to long-term care planning, is how important it is to work with someone who really understands this industry and in great detail. And this is why is and we work with a lot of financial advisors around the country, and a
Sure.
lot of people don't understand the health underwriting for long-term care. All of them will ask one question. And that question on their application is, have you been previously declined for long-term care insurance? And if you answer yes, you are pretty much uninsurable. And if there's one thing I could
Sure.
ask your audience is, and for financial advisors, I'm whether you work with me, I really don't care, but work with somebody that really understands this market because we have people that come to us that, oh, my financial advisor, all they work with is this carrier, and we submit an application with this carrier, not knowing their health condition to know, oh, they won't accept that health risk. And then that carrier declines them, and now they're stuck because they can't get the
Right.
coverage from somebody else. And that's why
Yep.
it's like I joke, I want my plumber to be a plumber. I don't want a plumber that can be an electrician. Uh, I
Right.
just want to focus on what you do well.
What
And
you
that
do
would
well.
be one
Yeah.
thing for your financial advisor audience and consumers is make sure you know this market? How many policies, annuities, whatever have you done in the last year? Because it just can make a huge difference for that person.
Well, for I would hope professionals want the best outcomes for their families that they're working with. I mean, I know I'm just naive in wishing that that all providers had that same mindset and value. But, if there's financial advisors who are listening to this, Nathan, you work closely with the advisors too to say so that you can use a collaborative approach and say, yeah, this is a great fit for your client and work as a team if there's an advisor that maybe isn't as familiar with annuities or they don't sell them.
Yeah.
So you work as a team approach.
Yeah, absolutely. And one of
So,
our founding bedrocks in 1988, and it's been absolutely the same principle, is having a plan for long-term care is what's most
yeah.
important, not long-term care insurance and our annuities or whatever. So if we work
Yeah.
with somebody and they have a plan and they're self-insuring, they're wealthy enough or that's their option or whatever, but they have a plan that works for them, we've done our job. Whether we've sold or made
Yeah.
money or anything is really secondary. The first thing is
Sure.
having that plan in place for that family. And so that's the
Yep.
one of the focuses for us as an organization is making sure someone has a plan. The financing piece is kind of a secondary discussion, but
Yeah.
having that plan
Yeah.
in place is really primary.
Yep. Excellent. Good. All right. Well, this was so informative. You are like the guru of annuities, and I just really appreciate the time
Yeah.
that you took to educate and bring awareness about annuities and the value that they can provide in senior care planning or long term care planning. And how to wrap up here, how would people get a hold of you, Nathan, if they wanted to learn more?
Yeah, so the best way to learn more is if you go to ltcconsumer.com. We've got a whole bunch of resources from videos to content and things. You can request a quote and work with my team. We're a national firm, we're in all 50 states. We represent all the top companies in the country, and they can just get connected with someone with my team. The other part is once you get connected with that specialist, you're working directly with them. It's not a
Sure.
call center type deal. It's very, very high
Yeah, you're
touch.
not getting bounced
No,
around.
you're gonna
Yeah.
get connected with that specialist and you work directly with them through the entire process. And I appreciate the opportunity. Like I said, it's an important thing because it's an issue that all of us are gonna face. We're all gonna get older. Our families are gonna get
Yep.
older, and we're gonna have caregiving events happen. It just is a fact of life.
It absolutely is a fact of life, and dementia is not going away.
No,
So, not anytime soon, not in our lifetime.
no.
So, it's best to plan ahead instead of failing to plan.
Yeah,
So, Nathan, again, thank you so much for your time today, your expertise. Thank you again for your time, and I'm glad 2026 is off to an amazing start for everybody.
perfect. Thank you. All right.